Hello traders, you're welcome back to the channel. If you are into scalping and looking for ways to improve your trades, then this video is for you. We are diving into the best leading indicators for scalping, the tools you can use to get ahead of the market and make those quick trades with precision. All right, scalping is all about timing, and using the right leading indicators can give you a huge advantage. Whether you are trading Forex, stocks, or crypto, knowing which indicators to use can make all the difference in your success. Now, before we dive in, don't forget to hit that like button, subscribe if you haven't already, and turn on the notification bell so you never miss an update. Let us get started. Now, before we dive into the specifics, let us talk about what leading indicators actually are. Okay, in trading, leading indicators are tools that help forecast future price movements. Unlike lagging indicators, which confirm trends after they have happened, leading indicators give you a sneak peek into what might happen next. So this is crucial for scalping, where timing is everything. Scalpers need to get in and out of trades quickly, and by using the right leading indicator, you can spot potential reversals or breakouts before they happen. The key is to use these indicators. The key actually is to use indicators that give you early signals so you can enter the market with confidence. All right, now let's just break down the best leading indicators for scalping that you should have in your toolkit. And the first we're going to be looking at is the relative strength index. All right, the RSI for short. Now, the first indicator on our list is the RSI, or relative strength index, and this is one of the most popular and powerful leading indicators for scalping. All right, the RSI is a momentum oscillator that ranges from 0 to 100. Typically, an RSI above 70 signals that an asset is overbought, while an RSI below 30 suggests that it is oversold. As a scalper, you can use the RSI to identify potential reversal points. For example, if the RSI is above 70 and starts turning down, it could mean the price is about to reverse from a bullish trend, giving you the perfect moment to sell. Similarly, if the RSI is below 30 and starts turning up, it may signal a buying opportunity. Now, the RSI is a fantastic tool because it helps you catch potential reversals early, which is crucial for scalping strategies. The second indicator we're going to be looking at is the stochastic oscillator. Right? The stochastic oscillator. Okay, this is another great leading indicator, especially for spotting potential price reversals. The stochastic oscillator compares a security's closing price to its price range over a set period. The result is a value between 0 and 100. When the stochastic is above 80, the market is considered overbought, and when it is below 20, the market is considered oversold. As a scalper, you can look for crossovers in the stochastic oscillator. If the percentage K line crosses above the percentage D line, percentage K is the blue line. Let's just look at this. Can you see? The percentage K, the percentage D. You can see the percentage K is the 5, the percentage D is the 3, right? So when the percentage K line crosses above the percentage D line, below the 20 level, that's a potential buy signal. On the flip side, if the percentage K line crosses below the percentage D line above the 80 level, that could indicate a sell signal. Now, the stochastic oscillator is a great tool for finding overbought and oversold conditions and predicting when a reversal may occur, making it perfect for short-term trades. Then finally, we have the moving averages. All right, we have the moving averages. Okay, another essential indicator for scalping is the moving average, or the MA. Now, there are several types of MAs, but for scalping, exponential moving averages are often preferred. Okay, this MA method should be set to exponential. The EMA is often preferred, because they respond more quickly to price changes. When the short-term EMA crosses above the long-term EMA, if you want to use the crossover strategy, then you might have to add, you know, two EMAs. For scalping strategy, you can use the 9 EMA and the 21 EMA. So I already added the 21. Now this is the 9. Okay, so when the shorter term moving average crosses above the longer term moving average, it can signal a potential uptrend. And when the short term EMA crosses below the long term EMA, in this case, the 9 EMA is the short term, while the 21 EMA is the long term. Okay, so when the short term EMA crosses below the long term EMA, it might signal a downtrend. The key with MAs is to use them in combination with other indicators to confirm trends. Moving averages can help you spot the overall direction of the market, so you can enter trades in the same direction as the prevailing trend. They are especially useful when combined with momentum indicators like the RSI or the Stochastic Oscillator. Now that you know the best leading indicators for scalping, let's talk about how to use them in real-time trades. All right, so ensure that you always combine your indicators for confirmation. Don't rely on just one indicator. For example, if the RSI is signaling an overbought market, but your moving average is showing an uptrend, you might want to wait for a clearer signal before entering. And then you can look for divergence as well. Divergence between price action and the indicators like the RSI or stochastic oscillator can be a powerful signal for a potential reversal. Also, ensure you use multiple time frames. All right. While scalping typically happens on short time frames, it's a good idea to check time frames like 15 minutes, or 1 hour charts to confirm the trends, the market's overall direction. You may not necessarily need to go to the daily chart or the 4 hours chart, but at least you can go to the 1 hour chart to confirm the overall trend direction so that you will execute your scalping trades in the direction of that trend. Okay. Then finally, ensure that you always practice on demo accounts. The best way to get comfortable with these indicators is to practice. Use demo accounts to test out different combinations of indicators before committing to live trades. So there you have it, some of the best leading indicators for scalping that can help you predict market moves and improve your trading strategy. Now, these indicators will give you the edge you need to enter and exit the market at the right time. Before we wrap up, I would love to hear from you. What is your favorite leading indicator for scalping? Drop a comment below and let us talk about it. If you found this video helpful, don't forget to like, subscribe, and hit that notification bell so you never miss an update. I'll be back with more tips and strategies to help you level up your trading game. Thank you for watching, and as always, happy trading.